Hey guys, Dan here, and welcome back to my channel, Investing with Dan. Today, I'm going to explain to you the definition of a dividend and give you an overview of what makes them so great and how you can get your hands on some. For the first-time investor, the stock market can be a fascinating, albeit confusing, new world full of crazy ups and downs. As you continue your journey and begin to make your first few investments, you will come across many new and puzzling concepts along the way. One of these terms you will definitely encounter is the phrase dividend. Perhaps you have heard this in the expression to pay dividends, and you know that it has a positive connotation, but your understanding most likely stops there. So starting off with the definition, a dividend is a share of profits and retained earnings that a company pays out to its shareholders. When a company generates a profit and accumulates retained earnings, those earnings can either be reinvested in the business or paid out to shareholders as a dividend. Now, not every publicly traded company will pay a dividend when they have generated excess earnings. They may choose to expand their operations, acquire more assets, or even buy back shares of their own company. However, if they do choose to pay their shareholders a dividend with the excess revenue, they generally do so in a regular fashion, perhaps quarterly or sometimes monthly. When a company distributes dividends to shareholders, this is seen as a positive sign for the company's financial health. If a company can afford to pay dividends to shareholders, then in theory, they should be making a profit. Additionally, if the company has consistently increased their dividends, then they are likely to be a consistently profitable business. As an example, let's say you own 10 shares of a company. The company decides to issue a quarterly dividend of $1. That means that every 3 months, you would receive a total of $10 in dividends, since you own 10 individual shares, each paying $1. Over the span of a year, you would receive 4 unique dividend payments totaling to $40 over the course of 12 months. In general, shareholders have 2 different ways they can choose to receive their dividend payment. Option number 1 is that they can take the money as cash and have it deposited straight into their bank account. Or option 2, they can decide to have the value of their dividend reinvested and given back as more shares of the company they own. This is called a dividend reinvestment plan, or DRIP. People that are looking to have their investments generate income, like retirees, will usually receive their dividends in cash. But for people looking to increase the size of their ownership in a stock over time, such as younger people, reinvesting the dividend is an excellent strategy. Dividend reinvestment plans are a way you can increase the number of shares you own and simultaneously grow the amount you will receive next dividend payment. Dividend stocks are companies that pay out regular dividends. Dividend stocks are usually well-established companies with a track record of distributing earnings back to shareholders. These companies are more reliable with their profits and can afford to pay out dividends to shareholders rather than further investing or expanding their own company, as a growth stock would usually prefer. Some examples of popular dividend stocks include Coca-Cola, Johnson & Johnson, McDonald's, and Walmart. In terms of dividend stocks in Australia, think of names like Telstra, the Big Four banks, Woolworths, Rio Tinto, and BHP. They all have well-founded and resilient business models capable of weathering economic downturns and therefore continue to reward shareholders with regular dividend payments. Well, that's it for today's video, covering the basics of what dividends are and how to receive them. If you enjoyed this video or learned something new, make sure to like and subscribe. It really does help this channel grow and allows me to continue making more content. Be sure to leave a comment down below on what you found interesting or anything else you might like to learn more about in a future video. So that's all from me today. I hope you enjoyed watching, and I'll see you next time.